From Creamer Media in Johannesburg, this is the Real Economy Report. Our top stories this week. Emerging market risk remains. We have a look at the most innovative new products from defence company BAE Systems Land Systems South Africa, and Harmony Gold spreads its wings. While many emerging economies have weathered the global economic crisis better than most advanced economies, economists warn that some emerging market risk remains. Chanel Pringle has the story.
Economists participating in a recent Economic Outlook conference held in Johannesburg agreed that the global economy is shifting. Emerging markets such as India and China have achieved better growth in 2009 than most industrialized nations, owing to fewer fiscal imbalances. The more efficient allocation of capital by emerging economies is another reason for this shift, says one economist.
If your interest rates have been hiked, you actually allocate capital to the most viable economic activity, which of course is not destroyed the moment you change interest rates. And I think that's what's basically been resetting the global economy. Why emerging markets are doing so much better now is because you've got better capital allocation in those economies.
However, another economist points out that many emerging markets still face economic challenges as a result of inequality of income and socio-political problems. He also questions whether the growth models of many emerging economies are built on stable foundations.
Everybody talks about China, but there are also some problems with the growth model of China. Excessive reliance on exports and capital investment, excessive loose policies over the past few years, credit is too cheap. So excess investment, risk of overcapacity, risk of falling returns on investment, which can only be resolved if China over time shifts to a more consumer growth-led model.
BAE Systems Land Systems South Africa has introduced the new 6x6 RG35 vehicle to the global market. The latest development of the RG32 has also been introduced and will be delivered to Ireland this year. Petronelle Smith reports.
Innovations such as the RG series of armoured vehicles is key to BAE Systems Land Systems South Africa's growth and success. The company's managing director, Johan Steyn, tells us more about these innovations.
I think our most innovative product is the new RG35, which is a 6x6 vehicle and is based on our experience, 30 years of experience on landmine protected vehicles. And this put us into a new class of vehicle, somewhere in between a normal 4x4 and an 8x8 infantry fighting vehicle. And we believe there's a specific niche market out there for this specific type of vehicle who can either be used as an APC or as a fighting vehicle. Secondly, our latest RG32 development, which we call the LTV, a light tactical vehicle, which we have sold into Ireland recently, and we will deliver those this year, is the first vehicle in its class with proper mine protection, and we believe that we will be selling those also to many other customers, again in the Middle East and in Europe.
South Africa's third largest gold company, Harmony Gold, currently mines only in South Africa, but all that is about to change as the gold major starts to spread its wings. Mining Weekly Online's Martin Creamer spoke to Harmony CEO Graham Briggs.
Harmony Gold has chosen Papua New Guinea as its first port of call and is working there in partnership with fellow gold miner Newcrest. Graham Briggs.
It's incredibly exciting. I mean, that whole province of Wafi-Golpu, gold and copper, we now have equivalent of a huge number of resource ounces. More drilling needs to be done, sure. More feasibility studies need to be done. But when you look at Papua New Guinea and you look at the mines that it's produced and the results that we've got, this could be really a world-class mine. Hidden Valley is going through the commissioning. It's going to be a great mine. It's going to have good cash costs.
Harmony is also continuing to explore west of its Wafi-Golpu asset, which is being firmed up.
Golpu, we've done the pre-feasibility study. We've done the estimate on the capital. Now it's a case of right there, we've got Golpu West right adjacent to it, right next door to it. Same capital costs virtually going into that, but you could almost get double the amount of ore.
Harmony foresees its copper gold Papua New Guinea assets eventually producing at a collective 600,000 equivalent gold ounces a year.
Now that is a huge mine. That's bigger than more than double that we have in South Africa on one of our single. You know, our biggest mines, of course, produce less than half that.
But Papua New Guinea is not without its political risks.
But, you know, we've been there for probably nearly 7 years now, and it's an exciting. You know, we've got full support from the government, we've got a lot of local support. It's difficult to infrastructure, you know, and there's a lot of international mining companies there. You know, all the big guns are in Papua New Guinea. It's a great province, and it's a good producer of both copper and gold. We would love to get into a position where we diversify geographically and are producing more from outside of South Africa, because we're very dependent, as you rightly said, 100% of our production has come from South Africa. In this next year it'll be reducing to probably about 92% because of the gold coming out of Hidden Valley. Ideally we'd like to get somewhere around 30%.
Mitigating risk is Harmony's partnership with Newcrest.
They have lots of technical experience. They have good experience in block cave. Again, that's where it comes into Golpu. So mining experience they have in abundance. They like Papua New Guinea. They like Southeast Asia as well. They like that Asian belt. So hopefully between the two of us we complement each other very well.
And now for a sneak preview of this week's Engineering News magazine. In our cover story, we highlight the outcome, or lack thereof, of the 15th Conference of the Parties in Copenhagen. We report that the first phase of the 690 million rand Coburg interchange upgrade project is expected to be completed by the end of April. And the latest police helicopters will be fitted out in South Africa and not in Europe, where they are manufactured. And in Mining Weekly this week, read our cover story where we interview mine officials on mine safety regulations, which are set to tighten in 2010. We report that China's largest diversified mining company, Chinalco, is on the prowl globally for copper investment opportunities. And South African state-owned rail transport enterprise Transnet wants to increase coal line rail capacity to 81 million tonnes a year. That's Creamer Media's Real Economy Report. Join us again next week for more news and insights into South Africa's real economy.
Engineering news, not just for engineers.